But when they sell you a car, there's the option that you'll upgrade that with full self-driving software, which means that they can more than double that gross margin just based on you clicking a button and buying their full self-driving software.
So, margin and demand troubles are pretty overblown. Our research, we've used Wright's law to forecast Tesla's gross margins over time. And basically, for every cumulative doubling in production, you get a corresponding reduction in price. We also know that they're unveiling a new vehicle platform, which should be roughly half the cost of the Model 3 and Y. I think that could be a custom-built autonomous vehicle. That's going to help margins. It's going to give a huge bump to margins in the long term because I think autonomous platforms could have really attractive margin structures and recurring revenue associated with them.
In this video, ARK Invest, the finance media, and some Wall Street stock analysts react to Tesla's epic Q4 earnings. You know what else reacted to Tesla's epic Q4 earnings? Tesla stock. Up over 10% today. So a big congratulations to all the dolts who shorted Tesla stock right at record lows. I covered this in a recent video. The lower the stock went, the more puts, the more people betting the stock would go even lower, near record lows. What's the saying? You can't fix stupid. By the way, guys, lots of fire content about to drop on Patreon, so stay tuned for that. If you're not already a member and you want more content, you can join with the card in the corner or the link in the pinned comment. Over 280 exclusive videos and counting fast. Tesla stock closed today up almost 11%. I'd like to say I'm surprised, but I'm never surprised. Tesla stock can be very volatile following earnings. Add to that the fact that the absurd valuation made literally 0 cents before earnings, and earnings wasn't the train wreck that the panicky Wall Street analysts were expecting, and this kind of thing can occur. I'd like to provide a little bit of context, something that's rather stunning, also entirely predictable. Tesla stock year to date. Are you ready for this? Seriously, what's your guess? What's Tesla stock done year to date? Leave your guess in the comments below. I'm about to reveal. Try up 48.26% year to date. The first trading day of the year, Tesla stock closed $108.10. Today, Tesla stock at $160.27. I just quickly want to remind everybody what happened. I covered this in a recent video, but it bears repeating. We're looking at Tesla options volume. Calls, as in bets the stock's going higher, in the blue, and in yellow, puts, people betting the stock's going lower. I shit you not. You can see for yourselves. A massive surge in people betting on Tesla stock going lower the lower it went. The highest number of puts was at Tesla's lowest point. That's right. People with confirmation bias and or a fetish for destroying their capital, whatever you're into I guess, were doubling down on their bet the company would go lower as the stock plunged to 2-year lows. Instead of thinking, hang on, I didn't like it at 400. In fact, I hated it at 400. I didn't like it at 300. I didn't like it at 200, but near 100. Maybe I should reconsider my stance on this company and more importantly, the stock. But no, a great example of confirmation bias. Oh, look, it's going lower. Therefore, my thesis is right. Therefore, I'm going to double down. I feel bad for these people. Tesla stock has surged about 50% since the beginning of the year. Imagine you taking out some puts at the beginning of this year or late last year. Tesla stock close to $100 a share. Talk about getting your face ripped off. Some people are beyond help. Rest in peace, my Tesla short selling friends. I hope you've got some cream to soothe your now scorched butthole.
Tasha, of course, you're bullish. You're bullish on Tesla in the long term, in the here and the now. The production focus, is there the demand to meet it?
I've seen Tasha respond to questions like this so many times that I'm confident in saying that she'll be overly polite and very, very gentle in her response. But I'm not Tasha. In fact, I might be the anti-Tasha. As polite as she is, I'm obnoxious. The fact that people are still asking the question, they're unsure about demand today, 2023, is embarrassing. Of course, until Tesla's earnings call, this was all hypothetical. I just continued to say they'll sell every vehicle they make all fucking decade. And people go, well, how do you know that, Steve? You're an idiot. How do you know that? Well, we got a great data point from Tesla yesterday on the earnings call. Elon Musk pointing out explicitly that Tesla's receiving about twice as many orders for vehicles per day as they're currently producing vehicles per day on the back of some recent price cuts. As I've said a trillion times, a linear decrease in price will cause an exponential increase in demand, and we've seen exactly that. Order flow is double the rate of current production on the result of marginal price increases, some more than others. But globally now, Tesla's receiving about twice as many orders per day as the vehicles they're producing per day. And now they're actually starting to increase prices again. I do not know when the folks in the mainstream media are going to stop asking about demand concerns. I don't know when the analysts on Wall Street are going to understand this. But let me be absolutely clear. Tesla will sell every vehicle they make all decade while continuing to ramp up production to 20 million vehicles per year. There will be no point over the next decade where Tesla slows down their rate of production and growth. No point. Why? Because as they scale up production, their costs will fall. Meaning, ready? the prices can come down, meaning that exponential demand thing, it's a whole flywheel. Make more vehicles, cost to make vehicles comes down, therefore the price you sell vehicles can come down, therefore more consumers can afford to buy the vehicles, therefore more consumers buy the vehicles. This flywheel will occur all decade. We're going to learn a little bit more about the next few products in Tesla's pipeline in just a month at Investor Day. Key among them, Tesla will address new markets they're not currently in and give us details on the next generation, more affordable vehicle. Now, this may be a conversation starter, maybe I'm being a little bit hard on the Bloomberg anchor here, but it really hurts my brain to hear people questioning whether or not there's sufficient demand for Tesla. One more time, they will sell every vehicle they make over the next decade, all of them. If they were producing 20 million vehicles today, just Tesla alone, they would be selling 20 million vehicles a year. Today, but they need to scale up production first. I don't understand why some people just don't get this. This is one of the fundamental misunderstandings. Those who don't get Tesla, they think the competition's coming. They just can't think. Because if you do think, go hang on, oh yeah, if they do make more vehicles, the costs will come down, economies of scale. They can buy more parts in bulk, get discounts. Oh, so that means the prices come down, therefore more consumers can afford them, therefore they can sell more vehicles, meaning they got more. Oh yeah, it's a flywheel. Oh yeah, okay, got it.
Well, you're absolutely right. Our focus is over the 5-year forecast. Tesla's our top position in our IRKQ ETF. But so in terms of, this production goal, they did mention, I think if you go back to 2020, they're still on track over, a number of years to meet their 50% compound annual growth rate. I think that the fears of, margin and demand troubles are pretty overblown. Our research, we've used Wright's law to forecast Tesla's gross margins over time. And basically for every cumulative doubling in production, you get a corresponding reduction in price. We also know that they're unveiling a new vehicle platform, which should be roughly half the cost of the Model 3 and Y. I think that could be a custom-built autonomous vehicle. That's going to help margins. It's going to give a huge bump to margins in the long term because I think autonomous platforms could have really attractive margin structures and recurring revenue associated with them. And then, the last thing I'll add is the main story here is that EVs are growing, right? So EVs as a category grew 60% year over year, while gas-powered cars were down 7%. So that's where Tesla is. I'd be worried about traditional autos, if anything.
Excessively polite, but she's absolutely right. One point I wanted to emphasize there, Tasha throwing the question back. The real concerns around demand are for traditional automotive manufacturers. It's curious that no one in the finance media seems to be discussing this. They're concerned about demand for EVs, they're concerned about demand for Teslas, but they're completely oblivious to the fact that internal combustion engine vehicle sales are already plunging off a cliff. This rate of collapse will continue to accelerate until it reaches terminal velocity. Next minute, splat. No one seems to get this. It's like everything's completely flipped. The concerns about EV demand, hello, are you high? Yet no one seems to notice what's happening with ICE vehicle sales. A real-time disruption is happening. This is round 2 of automobiles disrupting the horse and buggy. Yet all the concerns, is there really going to be demand for these fancy automobiles? I mean, people prefer a horse and carriage, right?
Are you worried in any way about the impact of Elon Musk himself on demand for Teslas going forward? Is in any way that being shown up in the demand erosion?
Yeah, Elon Musk has always been a pretty controversial figure. I'd say at a minimum, what do we have to go by? It's really Tesla's results. So Tesla alone in the fourth quarter, we know grew sales by 40% year over year, while in that same quarter, global auto sales were down roughly 8%. So that's what we have to go off of. He's a cult figure. I think he's really the person to drive the company towards reaching that full self-driving goal, where you can actually launch an autonomous ride-hail platform. So we're happy that he's committed to Tesla and sticking on for that.
Tasha, I want to bring some more information, I suppose, to our audience about what you were talking about. In the shareholder deck, Tesla's talking about its next generation vehicle platform under development, additional details to be shared at the Investor Day, March the 1st, 2023. I think that's what you were saying about you suspect that is some form of fully autonomous vehicle for the future. I want to bring it back to the here and now again, because a lot of what Tesla hinted at was the problems of 2024 were largely China related. It basically talked about the production issues largely being centered on the Shanghai plant. You look at margins where they came in, you look around the narrative on ASPs, average selling price. We went to our audience, and we said, did those price cuts in North America, Europe, China push you to consider buying a Tesla? These are the results, pretty clear, although I would point out they changed over the course of the day, with a good number of ballots cast, I suppose. Yes, Tesla's global price cuts have tempted at least our audience to buy. Affordability. Is Tesla too expensive right now for a consumer?
Good question there, Ed. How could we possibly know the answer to this question? Let's see. If Tesla sells the vehicles they make at the current prices, which they do, would that then not suggest that they're currently affordable enough to be selling the vehicles they're currently making? I think the answer would be yes. Now we can take it a step further. Are Tesla's vehicles currently affordable enough for everyone on Earth to buy one? No, clearly not. Good thing that Tesla's going to continue to drive their costs down and introduce more low-priced vehicles in the future. Curiously, this Bloomberg survey showing that 63% of people have been tempted to buy a Tesla following their price cuts. Now, I'm not sure exactly what people were thinking here. Were they already considering a Tesla and now they're absolutely considering one, or were they previously not considering one and now they are? But the point is, obviously, prices come down, more people can either afford and or consider purchasing a Tesla. I mean, it's literally on their website, in their master plan. They told us they were going to do this. They told us they would drive their costs down so more people can afford. Now, to be clear, to be super clear, today, purchasing a Tesla is beyond the means of most people on Earth. But as Tesla scales up production, lowers costs, and introduces new, even more affordable models, more people will be able to afford Tesla vehicles. I mean, it's very simple.
I think, so first of all, and I'm glad you showed that chart, one of the things that we learned is that since the price cuts, lead times have actually extended a bit. So we do know, we're already getting sort of initial indications of demand here. We also know that the price cuts made more vehicles eligible for tax credits. Of course, we don't actually model tax credits in our analysis. We think EVs are the solution longer term compared to gas-powered cars, regardless of regulation. I think really that's the picture here, that electric vehicles are taking share. Tesla's the market leader. They've just invested in additional capacity. They're at a single-digit low percentage points of total auto sales. So I think there's still, Tesla is, and EVs, again, still single-digit percentage of total auto sales as well. So I think, that there's room to grow in both of those.
We got a lot of questions on Twitter for you from our audience as well. Most of them related to Tesla's energy business. What did we learn about the energy business going forward? Will it be more of a star?
Yeah, so they did highlight the energy business recently, and again with that factory expansion, they talked how they've seen some good growth in that business. Overall, like our model is mostly focused on vehicles. We think that they should, while Tesla Energy does offer a really interesting proposition to consumers, and actually we've done some work to show that energy storage combined with Bitcoin mining can offer a great proposition to even make more use of renewable sources. But that aside, what should you focus on for Tesla? In our opinion, it's electric vehicles and autonomy. Those are the two main stories here that I'd watch over the next 5 years.
Totally agree with Tasha, and that's not to discount the impact of Tesla's burgeoning energy business. It'll be absolutely fucking gigantic, especially 2030s and beyond. Don't get me wrong, it's going to continue to grow at a ridiculous rate through the 2020s as well. But over the next 10 years or so, the biggest bang for buck, the biggest financial impact, the biggest impact in Tesla's mission, I believe, vehicles and autonomy. I am massively sandbagging and lowballing the hell out of my own expectations for Tesla energy growth over this decade. Those of you with access to my Tesla valuation model will know exactly what I mean. My estimates for energy growth are absurdly low. The reason I do this is for a bit of a buffer. If I'm a little bit wrong on autonomy, or vehicle margins, etc., my massive sandbagging of energy will probably fill in the gap. Any other business on Earth, if they were just doing what Tesla's doing with their energy business, would have a very bright future and a huge valuation. But the point here is that what Tesla's doing with vehicles, and more importantly, autonomy, dwarfs anything else they could possibly be doing, including their energy business. And remember, a Tesla bot dwarfs everything else, including automotive, robotaxi, and energy. But that's a story for another video.
Yeah, Tasha, really quickly, G. Munster of Loot points out that they guided to around 1.8 million vehicles for 23, which if you track a 50% compound annual growth rate doesn't make any sense based on last year's number.
Oh boy, feeling bad for Ed here. He obviously hasn't done his homework. It's not his fault. He talks about a million other companies, so I'm not hating here. But you know what? On screen now. I don't think Ed saw this page in Tesla's quarterly earnings report. Vehicle delivery growth rate, assuming 50% compound annual growth rate since 2020. Tesla first began guiding for 50% annual compound growth rate over a multi-year horizon at the beginning of 2021, which was factoring in where 2020 was at. We're seeing here on screen right now a 50% compound annual growth rate in blue versus reported deliveries in red. In 2020, Tesla grew deliveries about 50% over 2019. In 2021, as we can clearly see, Tesla far exceeded that 50% compound annual growth rate over a multi-year horizon. They did the same in 2022. And in order for Tesla to still be over this 50% annual compound growth rate over a multi-horizon in 2023, they must deliver less than 1.7 million units. I want to claw my eyeballs out when I hear these comments from people that don't listen to what the fuck Tesla said. Words matter. Comprehending the English language is important if you're going to make statements about what did or didn't happen. Ed just said it doesn't make sense. Ed is somehow oblivious to the fact that this is over a multi-horizon. And then he's just looking back to last year. It's a bit confusing. We heard this recently. Tesla missed their target. They're ahead of their target. These are the numbers. This isn't an opinion. I just wish people would fucking listen. Listen to what they say. Don't project your own meaning or invent some meaning where there isn't any. I think the stock market and the finance media is just so short-sighted in nature. They cannot grasp any guidance from a company that's over a multi-horizon. So Ed, what Tesla said makes a lot of sense, as we're seeing on screen right now. Looking forward to Tasha's overly polite response that somehow avoids saying, hey Ed, are you fucking high, bro? Did you listen? Obviously not. Do you see what I'm saying?
So last year, year over year, it does fall short of that 50%. But if you go back to 2020, you'd still be coming in over that, few year period with the 50% growth rate. So I think that's what they meant in their press release. Of course, I'm sure a lot of people will harp on that figure. But again, I think longer term, the story is electric vehicles are here to stay. And I'd be really worried if I was Ford or the other traditional auto manufacturers where the majority of their install base and the vehicles that they sell are gas-powered cars, which we see declining. That's not going away. Right. And by the way, they don't have a great autonomous solution either. They killed that project. So I think that's where the concern should be focused here on the traditional auto market.
Tasha, the other question from our audience for you is, what does Elon Musk have to say on March the 1st at the Investor Day to convince us of that future that goes beyond Tesla just being a car company?
Well, like I said, I'm excited to hear more about the autonomous vehicle. They had said that they would mass produce a purpose-built autonomous car in 2024. We think that this could totally change Tesla's business model. Our price target for 2026 split adjusted is around $1,500 per share. I think over 60% of Tesla's enterprise value, could be attributable to that autonomous ride-hail platform. I think it'll have attractive software-like margins. It'll become a recurring revenue stream as opposed to, one-off vehicle sales that we see today. It's going to totally change the game, and they're way ahead. We see that they have nearly 1 billion miles driven in full self-driving beta. They have millions of cars on the road collecting data. That's much more than competitors.
When faced with a tsunami of really dumb questions, let's just be honest, Tasha navigating them like an absolute fucking boss. Made a lot of great points, seeming to go over Ed's head. Either that or he just really wanted to focus on the FUD or demand issues, price issues, 50%, that doesn't make sense. Tasha spitting a lot of facts. It's curious. The finance media want to focus on Tesla's competition, concerns around demand, they're too expensive, yet completely ignore what's happening to legacy automotive, the huge disruption, and seemingly unwilling to discuss any of the financial implications of the insane robotaxi opportunity. Tasha's right. Tesla is. They've told us they're working on a dedicated robotaxi platform. It's obviously going to be a vehicle that is designed around autonomy being solved. May have a different internal layout, may not have a steering wheel, or maybe the initial design will, but eventually they'll delete the steering wheel and pedals. These things are going to cause a seismic shift in the automotive and transportation industry. As they get on roads, purpose-built Tesla robotaxis will begin operating in every city on Earth. Some will be consumer-owned, some will be owned by a commercial fleet, some will be owned by Hertz. These things are going to print money like you cannot believe, yet nobody wants to talk about autonomy. It's almost as if people are waiting for autonomy to actually be solved before they start to consider what the implications will be for Tesla, their valuation, their cash flow, and of course Tesla stock. This to me seems a little unwise. By the time the robotaxi fleet awakens, I think the stock's probably going to have responded in a fairly violent manner.
We expected the worst, and we got less than the worst. What's your read?
Well, it's exactly right. Elon Musk and the management team were there to tell us the sky was not falling. People had expected really bad results and even worse guidance. And look, they came out and said they cut prices, which everyone knew a couple of weeks ago in response to demand weakness. And guess what? Orders responded. Like you played the clip earlier, the orders were the strongest year that they've seen in the company's history. And importantly, what they said was that despite these cuts, gross margins would hang in there. They're going to be down in 2023, according to guidance. But there were fears out there that they would hit the mid-teens and below 20. And the CFO came out and said, we're not going to break 20% in auto gross margins, which was a welcomed message. And that means that our earnings for next year really weren't impacted, or this year, I should say, really weren't impacted. And where we have a lot of confidence is in our out year number of $11 plus in non-GAAP earnings in 2025.
They noted that their order rate was the strongest it's ever been. It is 2 times production capability. So more people want a Tesla that can get a Tesla. So why have they been cutting prices?
Well, if you recall, at the end of last year, the stock acted pretty terribly, to put it mildly, and that was in response to what we believe were indications of demand weakness. It all started in China. There were several data points that towards the end of the year, demand fell off, and then that weakness crept into the US and into Europe and other parts of the world. So the company had to respond, and as such, they cut prices, and lo and behold, the market responded, consumers responded, and orders picked up dramatically in the month of January. And like I said, the people were really, really worried what profitability would look like. And it's not going to be as bad as people thought.
Yeah.
So regarding the end-of-year price cuts, as I mentioned at the time, and as I unfortunately need to reiterate again, Tesla didn't cut prices because there were concerns around demand. They cut prices because there were new incentives phasing in that consumers knew about. If you're a consumer thinking about buying a Tesla, and you know you can wait a few weeks or a month, and you get $7,500 off your purchase. Unless you are so desperate to take delivery of this vehicle now, where you can afford to vaporize $7,500, you'd have to have rocks in your head not to go, oh, I'll just wait a couple of weeks and get it next year so I can get the $7,500 tax credit, which is exactly what was happening. And rather than Tesla going, oh, well, let's build lots of cars and not sell them this quarter, and we'll just wait. They thought, oh, let's build the cars and sell them this quarter, so they made pricing adjustments. Miraculously, many people misinterpreted this as a lack of demand or a signal demand was weak. No, it's a signal consumers aren't dumb. Let me ask you guys and girls a question. If you're thinking about buying a Tesla and you learned that you can wait a few weeks and to get $7,500 off, what are you going to do? Are you going to wait, or are you going to buy it now and pay more? Tesla needed to incentivize customers to take delivery of their vehicles in the final quarter of the year, so they're not sitting around on lots doing nothing for a few weeks. This didn't signal weak demand. It signaled intelligent consumers who are aware of a new incentive coming in. I can't believe that I have to explain this. As I said at the time, it doesn't mean there's no demand. It means consumers are putting off their purchases into the future. Demand remains unchanged. If a consumer decides to delay their purchase of a vehicle by a few weeks or a month to take advantage of an incentive, the demand didn't go away. The consumer made a decision to make a purchase later. The demand's still there. This is very important to understand. The stock market lost its fucking mind. Oh my god, the price has come down, there must be no demand. If there's an incentive consumers know about, they've got to have rocks in their head not to take advantage of it and delay their order. You can count on this happening again. There'll be another incentive phasing in or phasing out that will cause consumers to delay or bring forward orders. Tesla will need to adjust pricing accordingly, and the stock market's going to lose its mind once again.
No, and I don't cover the auto sector, George. I like cars. I don't know the margins of Ford or Toyota or GM. Maybe you do. But if I'm looking at a gross margin of 25.9%, that doesn't sound horrible. How is Tesla's margin actually stacking up?
Well, they have some of the best operating margins in the auto industry. And what's really, really important about this story is that as they cut price, what they're doing is seeding the marketplace with forward upgradable units.
Bingo, the Tesla fleet, future money printer. He's absolutely right. This is so important. Again, something people don't understand, especially if they view Tesla through the lens of, oh, they're just a car company. Tesla's a fleet with probably now around 3.5 million active users who anytime in the future can make purchases of software, almost pure profit over the air, bang. It's not just FSD, which itself is $15,000 straight to the bottom line. There'll be other purchases, subscription, downloads, etc. available in the future. And every single person that owns a Tesla has the option of subscribing to this service, buying this software package, paying for this upgrade. Name another car company for which that is a possibility. Oh wait, there are none. Maybe that means Tesla isn't just a car company.
So think about it. They make about 25-30% gross margin, which is about called $10,000 to $15,000 per car. But when they sell you a car, there's the option that you'll upgrade that with full self-driving software, which means that they can more than double that gross margin just based on you clicking a button and buying their full self-driving software. So it's really a brilliant move. We call it their razor blade model, right? They're selling you the razors, they cut price to get more razors in the marketplace, but they hope that you buy that razor blade to double their gross margin after you've bought the car. It's a very powerful model they put in place.
Right, well, Tesla out with a beat on the top and bottom line in its latest quarter, with the stock seeing a pop this morning on the back of its earnings release as the EV maker eased investor fears of weaker growth. However, the view on Tesla among analysts shows not all is smooth sailing. Here with the details is Yahoo Finance's Pras Subramanian. Obviously, a lot of people were watching this to see what would happen.
Rochelle, big earnings and big call last night. Analyst reaction mixed. Nice pop today in the stock. You have people like Dan Ives calling it the Super Bowl for Tesla. But you're absolutely right, though. Among others, there's been some sort of kind of consternation about what this means. So, Goldman's Mark Delaney reiterated his buy rating here, claiming Musk's comments on January orders being to date the strongest ever was, quote, the most important takeaway from the call, and I tend to agree with that. On the flip side, Tony Sacconaghi, AllianceBernstein, a noted Tesla bear, reiterated his underperform rating there, saying,
by the way, guys, just so you know, I currently have an underperform rating on Tony Sacconaghi.
He's torn after the call in the earnings statement. He's concerned about margins and whether demand can be sustained at these levels. Finally, Citi's Itay Micali, he raised his price target to 146, claiming the call gave some relief to the bulls. But there are still concerns like margins and a big free cash flow miss last night, which is actually kind of flew under the radar. So kind of a mixed bag here from the analyst point of view with the stock. I mean, there's no discussion. The stock's up 10% today.
And we knew that margins were going to be a big theme this earnings season, but you mentioned things flying under the radar. What are some of the things that one might have missed from Tesla's earnings?
There was a lot on that call, from Cybertruck to FSD and things like that. But I think under the radar, some stuff. Musk talking about how he wants to maintain strong volume growth while maintaining margins. That's kind of tough in an environment right here where margins are under pressure. Inflation has been rising. But maybe if prices do come down and you have ramp ups in places like Berlin and Giga Austin, maybe you can have that magic sort of mix of rising margins but lowering prices.
Praz is right. This is exactly what's going to happen. There are some headwinds facing Tesla at this point in time. Lithium costs going through the fucking roof. However, at the same time as they scale up production in Berlin and Austin, costs will massively come down from these factories. This will help margins. In addition, vehicles produced with the 4680 cells, a structural battery pack, higher margins by default. There's less stuff, it's more efficient, they're cheaper to make, and they're better. And as 4680 cells ramp up again, the more cells they're making, the cheaper each cell. It is possible for the price of Tesla vehicles, how much they're charging consumers, to fall, while simultaneously having their cost to produce the vehicles fall, meaning, I know, crazy ready, their margins can remain about where they are today. They could even grow while the prices are coming down. A lot of people seem to be overlooking this very important fact.
Another nugget that he kind of mentioned that sort of flew in the radar was, talking about who could challenge Tesla down the line. Musk said it could likely be a Chinese competitor because they, quote, work harder and work smarter than anyone else. Thought that was interesting. Kind of a diss here to American and European automakers who are sort of, kind of coming at Tesla on domestically here, but also in Europe too.
Indeed. A bit of a dig there, I think. I think you're right there.
Not so much a dig as an observation, in my opinion.
All right, let's get more color on this report with Gene Munster. Gene is the managing partner of Deepwater Asset Management. Gene, great to have you with us. You make the point, though, according to notes that I've gotten, that the operating margin number X credits, the numbers don't add up. Can you explain?
It's a little bit of a mystery on a couple points on this. Of course, the two biggest questions are around margin and separately related to what demand is. So let's start with the margin and the EVX credits. Phil talked about a number of 24.8%. That's the number that I generally I think is accurate. Separately, I've seen other people who are close followers of Tesla report a number of 25.9%. Either way, it's soft, it's light, so that's probably the most important takeaway. And of course, the critical point on this topic of margins is what is their guidance going to be? And I just want to fill in, Tesla does have an outlook section in their report, and they talk about their margins going to be higher than the automotive industry. The automotive industry is loosely at 16% margin. Last quarter, in the September quarter, I should say, they were at 27%. I've talked about maybe it's 25. Well, let's just call it 25 right now. You can drive a truck through 17% is higher than 16, and 25% is higher than 16. So we need some clarity on that, and I think that's going to have a big impact on how the stock trades tomorrow. The second quick piece that I'm just trying to get the numbers to line up is they also say in that outlook section that they will grow faster than 50% and end the year at 1.8 million vehicles. 1.8 million vehicles is up 37% from last year. And so, usually it's pretty clear what happened, what is happening. In this case, I need a little bit more clarity. This could just be simple mistakes on my end, but I just need more clarity.
Now, in fairness to Gene, this was obviously recorded before he'd seen the earnings report, but it just really does my fucking head in. Why does nobody listen? Tesla has been so consistent in referring to this 50% compound annual growth rate over a multi-year horizon. Every earnings report for the last couple of years it's been in there. Why does no one listen? I just don't understand. Is it Wall Street's brains are just so locked into the way they do things that they just, oh wait, multi-year horizon, no one's ever guided, does not compute. 1 year only. It really does puzzle me. I don't understand why Wall Street doesn't listen. It's not that hard. If you comprehend the English language and you know what the word multi means, you say multi-year, you understand that means multi-year, as in multiple years, as in not just 1 year, multiple years. I just don't get it. Just listen. That's all you need to do is just listen. Don't project your own meaning, just listen to what Tesla says. It's actually that simple.
Could they, I mean, they say actually in the Outlook section, 1.8 million cars. Could there does it make more sense mathematically if we are just talking about cars as opposed to vehicles? I mean, maybe they're not counting crossovers or whatnot. They're being really fine in terms of how they slice it.
Could be, but it's the difference between 37% and better than 50. It's 200,000 vehicles. It's a pretty wide gap. And if you look at S and X and semi, it wouldn't even be close to those. So and I think they would also be considered cars. And so I wish I could have. I would love just to give you a very clear answer about what this is. My sense is that they're guiding for a number of 2 million because I think demand has just skyrocketed since this price cut. And ultimately, I think the street was at around 1.8 million. So I actually think once the dust settles here, the message is going to be margins are coming down, just like people had expected. Demand is going up, just like people had expected. And ultimately, the true, this is probably going to end up being a little bit soft in the near term, Tesla shares, and probably just kind of be sideways over the next quarter until investors get a better sense of what the underlying growth is outside of these price cuts.
I think Gene Munster's starting to lose his mind a bit, I'm not going to lie. Now, no offense to the guy, right? He does his best. Says a lot of valid things about Tesla, but it was only a few days ago leading into earnings that he was advising investors to wait, expecting the stock would dip after earnings. It's now up like 10+%. Didn't age well. And at the time I said probably won't age well, but hey, anything could happen to the stock. But to me at these levels doesn't make a whole lot of sense. And now we have another short-term prediction on Tesla stock. Fraught with danger, anything could happen. Gene Munster's still thinking the Tesla stock could be going even lower. He might be right, but in terms of probabilities, odds are he won't be. Let's just leave it at that.
People who keep insisting this quarter was nothing to look at. How are you analyzing it?
Kelly, Tesla's always been an anomaly in the automotive industry, not because they just sell EVs, but also Elon Musk and the fandom that they have. And the most recent earnings, the positive kind of profits, even though they were lower on EVs, as well as the price cuts that they recently did, it put so much more pressure on traditional automakers like GM and Ford to not just make EVs, but make them profitably.
This guy gets it. He's absolutely right. Again, people seem to be looking at Tesla in isolation and also assuming they're just an automotive company. We heard earlier in this video, concerns about EV demand. How about the concerns about ICE sales collapsing? Nope, we're not thinking about that. That's not happening. Why would that happen? People still want ICE vehicles, right? Wrong. For some reason, for every action, there's an equal and opposite reaction comes to mind. Every single time Tesla swings around their gigantic pricing power and Turkey slaps the world across the face by dropping prices on their already industry-leading profit margin vehicles, it's just another nail in the coffin of legacy automotive manufacturers who are already losing money on every EV they produce, not making any money. And they're already struggling to compete on price and performance. The lower Tesla prices go, the faster legacy automotive companies go bankrupt. These companies cannot compete on price profitably. They can compete on price, but they'll go bankrupt because they lose money on every vehicle. But if they don't compete on price and lower their prices in line with Tesla, no one's going to be buying their unprofitable EVs. And I think what I'm trying to say is they're f***ed either way, and I think this guy gets it.
Which they are far from doing at this point.
Yeah, it's still, though, I mean, we've had even the headlines yesterday where Musk might be trying to sell or to sort of pay down Twitter debt. How is he going to do that? Is there going to be a second? No, he says no. So then what does that mean for him selling Tesla shares? What do you think is sentiment around the stock after we've gotten through this quarter and the profit concerns that people had going into it?
Tesla, they're always concerned about Elon. They're concerned about the company. But overall, at the end of the day, they're an automaker that does software extremely well. And we've been seeing the investors react to that right now. I mean, shares are trading in the double digits. The traditional automakers would be killing for that kind of quick hit and that type of quick increase when they hit a profit like that or when they beat But right now, Tesla still is pretty much in a league of its own when it comes to kind of investors as well as EVs in general. We keep talking about EVs coming, EVs coming, EVs coming. But at the end of the day, Tesla sells more EVs than anyone in the U.S. That's kind of coming down a little bit, but they are still the leader outright.
And I'll tell you, when you drive around in this market in the Northeast, you see so many Teslas. You'd be hard-pressed to find another brand that is as highly represented as Tesla is. But speaking of another brand that is very highly represented everywhere, and that is Toyota, its CEO, Akio Toyoda, has stepped down to be replaced by the person who had been heading up Lexus. What does this mean for the company and its shares, if you can discern?
This is actually extremely bullish news for Toyota, although, spoiler alert, I think it's too little too late, but this is big news. If you're new around here, I've been taking a shit on Toyota's president/CEO for the last 3 and a bit years running. Occasionally, people will mistake my obnoxious, assertive, aggressive comments as hate. Far from it. I'm just trying to draw attention to the fact that the captain's trying to sink the fucking Titanic and everybody on board will be dead unless something changes. I have relentlessly roasted this moron over the last 3 years because he's killing the company. Now, I'm sure Toyota aren't actually watching my exclusive Patreon videos in which I tear this idiot to pieces over and over and over. Nor are they watching my YouTube videos in which I discuss the demise of Toyota. But finally, someone in Toyota must have seen the writing on the wall. This incompetent moron is getting shit-canned. Rightfully so. I still think it's too little too late, but it is a positive sign. Speaking of incompetent leaders in legacy automotive companies, you know who's next? Mary B.S. Barra, who should have been shit-canned the moment she took over as CEO. It was a bit of a toss-up as to who was the least competent automotive CEO, the leader of Toyota and GM both giving each other a good run for their money. But now, with Mr. Toyoda, guess what? You know why he's got that surname? That's right. He's not in that position because he's competent, because of his grandfather founding the company. Never a good recipe. Now that he's out, all eyes are now on Mary B.S. Barra, who unquestionably is the least competent, least fit to lead CEO of any legacy automotive company on planet Earth. What I'm trying to say is, at some point, Mary B.S. Barra too will be shit-canned. And at that point, it will probably still be too late for General Motors to survive as well. But I'm telling you, Mary Barra is utterly incompetent, dangerously so. And I hope, which isn't a strategy, but I do hope, Penny will drop at GM and they'll kick her ass to the curb. It's not personal, but she's not competent. She too is hell-bent on colliding with an iceberg, destroying the entire company. It's no longer a toss-up for the least competent automotive CEO on earth. You did it, Mary.
Tyler, I woke up this morning and I saw that Akio was stepping down. It was a very big surprise. I think it was a lot of surprise for many externally. Akio is 66 though, and he was working with the chairman who is in his mid-70s, and it was kind of decided that it was time. And Akio and Toyota have been facing more criticism this year because of electric vehicles and last year and the success of Tesla and Toyota kind of being not investing in EVs as rapidly as others. And this is going to be an interesting transition. Akio still will be chairman. His name is on the company. He's a namesake. His grandfather started the company. But it should be interesting to see what the new CEO does, who was leading a lot of their electrification efforts with Lexus, how much they change the plan or if they even accelerate that EV plan or what they do. They have really been pushing for hybrids.
Yeah, no, they've been pushing hybrids and plug-in hybrids on their Toyota brand. If I had to judge just as an amateur observer, it would be that Lexus is ahead of Toyota in terms of EVs. I mean, they have more product or a more prominent product, I would say, in that space.
You know, I wouldn't even go that. Lexus is just such a small brand at this point, but by 2030, they do want to make Lexus completely all electric. And that's why the decision for the new CEO internally, everyone has told me that it makes sense. It was kind of a natural progression at this point, but the EV plans are still in flux and trying to kind of shore up that and get investors on board. Because when you look at Toyota, it is truly a global automaker. Switching a light switch and turning to all EV is not going to work for that because you have geographic reasons that aren't ready for that. So we're just going to keep seeing this transition, and it's going to be very interesting to see what the new CEO does.
Join us right now, Mark Fields, the former Ford CEO, also a CNBC contributor. It's great to see you, Mark. You've been, dare I say, skeptical, maybe is the polite way to put it, about Tesla over time. I'm curious what your take was on these earnings.
Well, Andrew, I thought, relatively speaking, they hit record earnings. It was a relatively good quarter, even despite, a lot of the issues, supply chain, demand in China, et cetera. I think that, to me, the most impressive thing is if you think about the trajectory they've been on over the last couple of years, Their first full year of profitability was back in 2020, and they made about $720 million. This year, they made over $12.5 billion. And right now, that's more than what's projected for Ford or GM.
This is a very important point. In the span of just a few years, Tesla has gone from making no money to making all the money. More than legacy automotive manufacturers, established automotive manufacturers in the United States, in just a few years. They've done what no other automotive company have been able to do in a much shorter period of time. That's all the proof I need that Tesla is just a car company. Hence, they're getting results like all the other car companies instead of embarrassing all the other car companies.
So it's quite impressive what they've been able to achieve between that and building up to 2 million units of capacity at this point.
Okay, so does this change your view at all about the valuation of this company?
Well, I think, this company has been valued much more as a tech and software company than a regular car company. I think what you're seeing now, they're experiencing what it takes to compete as being one of the big players now in the auto industry, which is when you see demand go down, how do you stoke that demand, the impact on your margins? And I think investors are looking at this and saying, should we go forward and continue to value it as a technology company and the growth involved, or should we value it as a traditional car company? But I think what Musk has said is, listen, with these price cuts, we have the advantage of scale versus the established automakers. So even if you want to, look at me more as a regular automotive company, look at my margins versus the competitors, because these price cuts are really going to put a big challenge for the traditional automakers who are now launching their EVs.
More facts. It seems that increasingly people are starting to understand the implications of Tesla's recent price cuts. That is, accelerating the demise of legacy automotive manufacturers who are trying to compete with Tesla in electric vehicles and already failing. Isn't it interesting to hear the narrative change in the span of just a few months, maybe a year or so? The competition is coming. This company, that company is introducing 79 different EV models yesterday, therefore Tesla's f***ed. Now it's, Tesla managed to cut prices, yet they still have industry-leading margins, and that's putting enormous pressure on legacy automotive manufacturers.
Well, and that's the question. Can the other automakers cut prices in the same way? I don't think they can.
Well, they're going to have to respond, Andrew, in one form or fashion, because, the way consumers shop and they cross shop, it's based on price. They're looking at a price range, and if your product doesn't fall within that, you're not even being considered. So I think the automakers, the traditional automakers, their challenge is, is to get to scale. When you ramp a plant, it's really important to ramp it up fully, get it stabilized. That's when you can really start working on cost efficiencies within the plant and with your suppliers. That's what Tesla has been able to do. And so I think the automakers, they're going to have to, Tesla went through what they called production hell to get to scale. The established automakers know production at scale, but it's not going to be a cakewalk for them. So they have to get that volume, which means they have to be price competitive.
Mark, can we talk cruise control and self-driving? I don't know if you saw this. Your former company, Ford, coming out of the top of a Consumer Reports list, I think it was just yesterday, that the sort of automated cruise control, which is not necessarily as advanced as what Tesla's doing, for example, in terms of full self-driving and the like, but actually came out on top. Tesla fell to number 7 because Consumer Reports didn't really like the fact that...
Doesn't like the fact that Tesla doesn't fund them. No, really. Go look up who actually does fund Conjob reports. Consumoron reports. No, what's it called? That corrupt organization that pretends to be unbiased and previously once was and no longer is? It's mysterious and miraculous. No matter what Tesla does, it's not good enough for Conjob reports. There's always somebody else who may or may not have ties and or be funding the company who has a superior product or technology. If you guys are curious, search this YouTube channel, Solving the Money Problem, Consumer Reports. You'll see all sorts of bullshit from these morons. They're a truly corrupt organization. At some point, they probably weren't, but they're absolutely unequivocally corrupt as fuck right now. And they're definitely not funded by the Ford Foundation. They don't have ties to GM. And if you disagree with me because you've actually checked out and done your homework, well, yeah, you're right. What I said wasn't true. They are actually tied to GM and Ford and clearly, in bed with legacy automotive manufacturers and clearly doing everything they possibly can to shit on Tesla just to give the perception that Tesla's not up to scratch. It's just shameful. These are, of course, the same fucking morons who showed people a step-by-step tutorial in how to defeat Tesla's driver monitoring system to perform illegal and dangerous behavior on public roads, because that's really helpful to consumers, isn't it? Hey, consumers, here's how to do something illegal and dangerous. Here's a step-by-step tutorial to do something illegal and dangerous in a Tesla vehicle, because we really care about consumers.
You have to put your hands on the wheel, but that they have no cameras looking at people's eyes. Did you see this? They actually put Ford and GM, or I think a Cadillac, at the top 2 slots on this.
I'm shocked. Ford and GM, 2 companies with financial ties to Consumer Reports, number 1 and 2 when it... they're not even trying to hide it. Now, I've got a funny feeling that Mark knows there's corruption involved here. He knows exactly what's going on, but he won't say it out loud, so I'm looking forward to his politically correct response and avoidance of the obvious connections with Ford, GM, and Conjob Reports. By the way, there's so many great wordplays on this. Consumer Reports.
Yeah, when you look at the self-driving capabilities or automated driving capabilities, and somebody like Ford and even GM, those systems are very easy to use. Listen, the automakers, the established automakers, have a lot of experience with cruise control, adaptive cruise control. They understand how consumers are using their vehicle. And listen, the safety is top paramount for the established automakers. And I think you're seeing that in this report that you mentioned that came out, that the usability of it is really good.
What is going on with the stock after hours? And we have seen a strengthening in Tesla's stock price as that earnings call has gone along. A couple of reasons why I think here, if you distill that earnings call like I'm about to do right now. First up, Tesla, Brad, really teased cost cuts throughout that earnings call. Of course, they started off their earnings release teasing a more efficient operation. You saw CFO Zach Kirkhorn really play that up on the earnings call. You saw Elon Musk lock in on them being a more efficient company, really battening down the hatches in terms of how they operate their business, really playing into the buzzword right now into tech, that is cost cuts to improve profits inside of a slowing economy. Now, Elon also warned about a pretty severe recession. We'll get to that a little bit later. Next thing that I think is driving the stock price here, Brad, Elon and his team really confirmed that the Tesla Cybertruck will in fact begin production this year. Now, the street wanted to see this weird-looking angular truck production starting mid-year. Elon said that would start in the summer. Ultimately, volume production will kick off in 2024. I think the street really liked hearing that this Cybertruck will finally reach some form of production at this point this year. Also, too, here, and we have the audio for this one here, Brad. The gross profit margin outlook into this earnings call for Tesla very much in focus. There was some concern with Tesla cutting prices recently pretty aggressively to stoke demand. Would that automotive gross profit margin dip below 20%? Of course, that would be a big, huge decline if that did in fact happen. Here's what CFO Zach Kirkhorn said on the call.
There's certainly a lot of uncertainty about how the year will unfold, but I'll share what's in our current forecast for the moment. So, based upon these metrics here, we believe that we'll be above, both of the metrics that are stated in the question. So 20% automotive gross margin, excluding leases and red credits, and then 47K ASP across all models.
It's nice to see CFO Zach Kirkhorn doing the job of the Wall Street analyst for them. Strangely, I think Wall Street was expecting Tesla margins to collapse. It's not that hard. Figure out the price reductions, figure out their ASPs, their previous gross automotive margins, factor in which factories are the most profitable. Shout out to Shanghai being more profitable than Fremont. Shout out to Berlin and Austin too, which will both be more profitable than Fremont and maybe on par with, maybe even better than Shanghai. Obviously, as these factories ramp up, margins improve. This somewhat compensates for the price cuts. I'm sure the smart folks on Wall Street could have done the math and figured this out themselves, but I guess they needed Tesla to tell them. I think if I'm not mistaken, the average Wall Street analyst thinks they're a reporter. They're here to tell people what's already happened, rather than figure out what's going to happen and tell people what they think's going to happen before it happens. Is it just me? Maybe that is the job of Wall Street. Maybe they're news reporters, not weather forecasters.
Yeah, and that ASP was what was key about this. And that ASP 47K that they mentioned on the call, I mean, we were just taking a look at some of the automotive gross margins within this earnings report that had just dropped. And you kind of got this vibe, which we'll get to our vibe checks in a moment from this call. But I think at the end of the day, one thing that did stick out to me was not just the amount of times that Elon wanted to to come back to recession. It's almost like he wanted to be at World Economic Forum and be asked about his take on what a recession may look like. And here's the actual verbatim that he did say about this. And this was actually the biggest stock move that we did see as well around that, because in after hours, you also saw this spike up for much of the time during the call. It was higher by about 1-2%. And then you saw this move higher on his comments about the recession. And here's why. He said, if the recession is a serious one, and I think it probably will be, but that will lead to meaningful decreases in almost all of our input costs there. So he's describing a deflationary environment. That is what some of the investors really latched onto, a deflationary environment, at least for some of those input costs, materials, and what have you. And so that particularly is what we did see some of that share price action on, even in the extended hours here.
This was actually a very important point. I wasn't paying attention to how the stock reacted. Maybe it did, maybe it didn't. Maybe it's a coincidence. But it's true. If we enter a severe recession, consumers stop buying ICE vehicles, buy less electric vehicles, Tesla's input costs will collapse because the parts that companies couldn't get enough of now are in oversupply. Tesla's like, well, we'll take them. Let's organize a deal. A recession is literally the best thing that could possibly happen to Tesla. In fact, a severe recession is the best thing because, one, it will destroy legacy automotive manufacturers and a lot of their so-called EV competition. Actually, in fairness, it will just accelerate their already inevitable demise. It will allow Tesla to continue selling through their production, getting more vehicles on roads and improving their autonomous software. They may be able to hire the few A players that are working at some of their so-called competitors after they go bankrupt or are close to it. And while other companies see their vehicle sales collapse, they can't afford to make vehicles that anyone wants to buy, so they just stop making them. Tesla can continue to make vehicles, perhaps even more profitably than they currently are, during a recession. Talk about a win-win.
It was remarkable to see how long it took for somebody to ask about Twitter as well. Of course, they were taking questions from Say, and the question really was, look, dude, you're spending a lot of time on this other baby, this other child that you've just been able to kind of bring into your home, the Musk home, but not the Tesla home. However, it's taking time away from how much time you spend with us. And so he was asked about that. We have a clip of that to play for our viewers too.
Well, let me check my Twitter account. Okay, so I've got 127 million followers. It continues to grow very rapidly. That suggests that I'm, reasonably popular. Now, I might not be popular with some people, but for the vast majority of people, my follow account speaks for itself. I'm the most interactive social media account, I think, maybe in the world, certainly on Twitter.
All right.
Brad, I was supposed to get to some vibe checks here on this conference. Well, hold on. Just because he has 127 million Twitter followers, does that mean he's super popular? It means what it does mean is that he's an important dude, important person on the platform that he owns.
It's quite amusing the way that many people are interpreting these comments from Elon, which are statements of fact. It is true. There are some number of people who follow Elon Musk on Twitter who don't like the guy. They're secretly admirers, but they consider themselves to be haters. The point Elon was making is the very vocal minority of people crying in the corner, virtue signaling, I'm not buying a Tesla now because Elon bad, because the media told me Elon bad. They're a speck compared to the number of people who are interested in what Elon's got to say, and more importantly, who are following him on Twitter, meaning that he can share things about Tesla and Tesla products to this entire audience of over 120 million people. So many people whose own internal insecurity, jealousy, envy bubbles up when they see Elon Musk have taken this as if Elon's trying to brag about how many people following him on Twitter just because he wanted to brag, instead of relating it back to the question about all these people claiming to be butthurt and not buying a Tesla versus the reality. Do people not understand how significant it is to have an audience of well in excess of 100 million people following you on a social media platform? The guy can sell out burnt hair cologne. Seriously, do people not understand the value? Attention is the asset. For free, Elon Musk can reach more eyeballs than most legacy automotive companies will need to spend many millions of dollars attempting to reach a fraction of. Every single time Elon Musk tweets, many millions of people see his tweet. This matters. For every one blue-haired, fatherless moron who hates Elon Musk because that's what you're supposed to do because hating Elon is the current thing, there's like 100,000 people who are interested in what the guy's got to say, who don't hate him. People get a very distorted perception because of the very vocal minority. But Elon's point stands. Another way to think about this, what other company, not even an automotive company, what other company on earth can instantly and for free broadcast a message to a similarly sized audience? It's a trick question. No one, not even close. This actually matters a lot. Attention is the asset. Elon has the attention of over 100 million human beings. This is one of those moments where I once again want to claw my eyeballs out when I hear people saying things like, Elon's hurting the Tesla brand. Seriously, in simple terms, Elon knows what he's doing. He's a master marketer. Now, you could disagree because of the few extremely offended people who want to make sure that everybody knows they don't like Elon because he's bad, because that's what they told me. To focus on these few vocal virtue signaling morons and to disregard the fact that over 1/10 of a billion people follow this guy on Twitter. It's just nonsensical. You have to understand, ladies and gentlemen, the larger your profile and the more willing you are to share your thoughts and opinions on a wide range of topics, the more haters in absolute terms you're going to have. Once you reach a certain critical mass, you're going to have an army of haters. Tens, hundreds, thousands, tens of thousands, hundreds of thousands, then ultimately even millions of haters. If you have 1 million dedicated haters and 100 million dedicated fans and supporters, net, you're actually well ahead. I think this is a situation Elon Musk finds himself in. The perception, just based on headlines you read in the media and tweets you might see now and then, is that the entire world hates Elon. But this is anything but reality. It's so important to be able to distinguish and separate perception from reality. This is why Elon Musk made that point on the call. The perception is lots of people don't like me, but here's the fucking facts. Here are the numbers.
And there has been a real concern. Various polls, Elon scoffed at a YouGov poll. I think he, in fact, said who could trust them. But still, the fact is, his comments on Twitter and the way he's been acting is not CEO-like, and it has impacted this brand. You may not see it in sales for the fourth quarter, but maybe you'd see it at some point this year with Tesla and its various models.
Hi, my name is Brian. I work for Yahoo Finance. I have a box for CEOs and I'm trying to fit Elon inside it, but he doesn't fit. It makes me mad. Elon, why don't you fit in my box? Why do you not conform to the CEO template like every other CEO? You're doing it different and therefore you're doing it wrong.
Yeah. Look, we got to get some vibe checks here, and I'll just be straight away about this one. I gave this on a scale of 10 a 3 at the end of the day, and here's why. Because if there is a path towards a fully sustainable future for humanity, as Elon Musk was talking about on the call, then I need more excitement that they're pumping through during these communications, and I didn't get that. I was sitting here trying to stay awake, flights of chicken cutlets from Dave's Hot Chicken, just trying to make it through this call, Saz.
Well, I'm just sitting here in my my ninth energy drink from today in my trusty Yahoo Finance cup. And if you're out there watching, and I know millions of you are, you want one of these cups, just drop me a tweet. I'll get you over one. My vibe check is this. It's bad. I know the stock is reacting positively, but I really don't give a damn, because here's what I saw in this conference call. Brad, to your point, you have Elon warning about a severe recession. He said this before, but I do not want to hear Elon Musk warning about a recession. Check done. Do not like it. What I don't also like is that sketchy volume outlook from Tesla, calling for 38% growth this year over year. That is below their long-term CAGR, or compound annual growth rate, as Wall Street likes to say, of 50%. Do not like that.
I'm not going over it again. I'm just not.
As well. And then no sign on the pickup in demand, if there was one, on recent price cuts. I don't like any of it. He was asked this repeatedly. I would have liked to see Elon step up and say, we cut prices, people buying more of our junk.
I'm going to say it. Yahoo Finance really living up to their name. Brian claims to have listened to the earnings call, yet somehow missed Tesla explicitly stating the number of orders they're receiving per day is about double their current rate of production following the price cuts. Now, we all make mistakes, and I understand apparently they're half falling asleep listening to the boring earnings call. I definitely can't say the same about sitting through this Yahoo Finance reaction to the earnings call. But if you're going to come out with some really strong statements and you claim to have listened to the earnings call, and then you say something that wasn't covered on the earnings call that was explicitly detailed on the earnings call, I think it would be fair game to point out that the Yahoos on Yahoo Finance are really living up to their name.
I mean, I don't know. I mean, maybe they're thinking about, maybe they could actually theoretically do this. They're not supply constrained, right? It's more like a demand thing. So maybe they are, but I have to tell you, they're actually kind of downplaying those sort of expectations, right? Saz, and it's like 1.8 million. Like, they put that in there. That is not 50% CAGR from last year.
No, it's basic math. I don't know why they would put that on there. They didn't even push back on that, It's just ridiculous. You would think.
He's making it too easy for me. If you're going to come out that strong, you better make sure you know what the fuck you're talking about. Clearly, Brian does not. Dude, I mean, I hope he can figure out some way to delete this from the internet. Oh wait, the internet never forgets. I think it should be mandatory for everybody in the finance media and all Wall Street analysts to take English lessons. So when they actually read words in a Tesla earnings report, their brain comprehends the meaning of those words, and therefore they actually understand what they read. Because we've seen, 3 or 4 examples in this video alone, media reactions from people who clearly do not comprehend the English language or chose not to actually read the words in Tesla's earnings report and instead just invent their meaning. This is like the 3rd or 4th time in the same video. This, ladies and gentlemen, is why, on average, my general rule of thumb, most in the finance media are clueless morons. If they weren't, they'd probably be financially independent because they'd been investing in assets they talk about instead of just talking about them, and they no longer need to have a salary working for somebody, because let's not go there. Why is it so difficult for people to read, comprehend, and then comment? I really don't understand. And why are they pushing so hard on this? It's like, oh, look, we caught you, Tesla. Why would you put that? That's not 50%. You'd think, Tesla, they've doubled down on this. They've stated that's in line with their target, yet I don't think it is. Is it possible I could be wrong? Nah, Tesla's wrong. They commit fraud. They're wrong about everything. Elon bad. Therefore, yeah, I'm right. I don't need to think about it. I'm not going to double check. No, they're wrong. Doesn't make sense. Someone should have pushed back. Brian, my friend, please, dude, if you're going to open your mouth, please make sure that you know what you're fucking talking about first. I'm trying to help you, man. If not, I'm going to have to keep roasting you. You're better than that, man, surely.
For a math wizard like Elon Musk, he would have got that math right on the earnings release. But again, he seemed very sleepy on this conference call. He has a lot going on.
Yeah, I think you're right. So I knew you noted that he might need a nap, and I think he might be right. I think he said late last night, I was talking to the AI team about Dojo, and they asked, like, dude, focus on the production, not on supercomputers and the robot Optimus, right? It's like, that's way down the line.
All right, Pross, we got to cut you loose here, but just some final wrap-ups here. I mean, as we're taking away from the call, again, a lot of stuff said about what the future of sustainability for humanity may look like, but not a lot of details that are offered on when the Cybertruck will actually be a significant contributor to bottom line. He said 2023, it's not going to be. So for everybody who submitted their questions ahead of time, don't look up for the Cybertruck to really be a kind of put the team on its back type of player, even though Elon did say it's going to be his everyday vehicle on the call as well.
Brad, are we done? I could do this for another 9 hours.
Yeah, we're done. Brian has self-immolated repeatedly and really doubled down too. You're going to come out swinging, man. Make sure you got a good reason. The reaction to Tesla's earnings, quite a mixed bag. Tasha, Keeney of ARK Invest seems to get it. We also heard an analyst who actually gets it. Then we heard an analyst that doesn't get it. Gene Munster also saying something doesn't add up in Tesla's financials. Might have been talking to Gordon. We have 3 or 4 instances of people who don't know how to fucking read, claiming that Tesla's guiding under 50, but read the fucking report, you idiots. Read first, think second, talk third. And a lot of people confused as to why Tesla stock's surging higher. I wanted to give you guys and girls a really broad overview of everything that's being said about Tesla and the reactions to the earnings, just to show how disconnected the majority of the folks in the finance media and many analysts have no idea what they're doing. They can't read English. They don't know what words mean. They're inventing meaning where there is none. But at the same time, some folks get it. And now the narrative is starting to change a little bit about Tesla. The competition's coming to, if Tesla lowers their prices, that kind of fucks the so-called competition. People still aren't getting it overall. There's a lot of confusion, misunderstanding, and, well, just plain embarrassing comments. You know what's even more embarrassing than talking about the 50% compound annual growth rate over a multi-year horizon and then referencing a single year and claiming, You know what's even more embarrassing than that? The dumb motherfuckers who shorted Tesla stock around $100 per share. The stock's up about 50% since that. Well done, you fucking idiots. I mean, seriously. It's one thing to hate the stock at 400 or 300. It's another thing to double down when the valuation is effectively cheaper than Coke, Pepsi, and Chipotle and think it's going lower. Finally, I'm right. Finally, the company's going bankrupt. To ignore reality and instead to just be guided by your emotions. I have absolutely no sympathy for any of the dolts who shorted Tesla stock around these levels. Just none whatsoever. Nor do I have any sympathy for the people who panic sold around these levels. Oh my god, it's going lower, recession, oh my god, market's collapsing. Just don't have any sympathy. As I said, you can't fix stupid. Damn, dude. I guess I had a lot to say. This might be the longest video I've ever posted on this channel that wasn't a live stream. If you appreciate it, and I gotta say, it was fucking painful to sit through some of this stuff, seriously. You guys have no idea how much I want to claw my eyeballs out when I hear some of the dumb stuff these folks say. If you appreciate my willingness to suffer through such pain and torture just to share my thoughts and opinions, you can support the channel and unlock over 208 exclusive videos and my Tesla price targets out till 2032 by joining Patreon with the card in the corner or the link in the pinned comment. See you over there. Love ya.